It's great to have you. So again, it looks like Wall Street really setting that high bar when it comes to earnings season. I'm curious how big of a driver you see earnings season really being, if it's going to be enough here to keep this momentum to the upside.
Yeah. So yeah, I mean, I think it's pretty interesting. And as you pointed out, right, according to FactSet, we're looking at earnings growth on a year-over-year basis up about 9% for this quarter. That's the biggest growth since Q1 of 2022. But I think very much like the markets, the expectations within those earnings estimates are kind of bifurcated, right? So we've seen this strength at the top end, in terms of the mega cap tech stocks. I think, the expectations for those stocks are, very, very high. So the bar is set very high at this point. And then if you look at other areas of the market, right, that haven't performed as well, at least until the last week or so, I think the bar had been, kind of sort of lowered. But, just given that markets are so dynamic, my thinking, around a lot of that has actually shifted, even just over the last week, just given the rotation that we've seen.
That's exactly where I wanted to go, was this rotation. Is this earnings cycle going to further that rotation, or are we just going to see a day like today where you got great earnings from TSMC and then the tech trade is right back on?
Right. So, in terms of, kind of the rotation, right, I think what you're going to see here from like the institutional investors, right, is that given we've had this very big move higher, right, I think when you do see some earnings weakness, right, they're going to come in to use that opportunity, right, to kind of buy a little bit of stock as companies move lower, right? If you look at sort of kind of positioning, in and around options markets and the dispersion that we've seen within markets, right, you've seen kind of index level volatility remain very low, but that single stock volatility has been really high, right? So I'd expected to see, these outsized moves on a single stock basis, but I wonder at this point if you have earnings misses that, aren't accompanied by, really negative revisions to kind of the forward guidance, right? If you just see some of that downside buffer, just as people are trying to buy stock a little bit cheaper.
How do you think investors should be thinking about this rotation, just in terms of how they're identifying those opportunities, when they're identifying those opportunities? And we talk about how much you shouldn't really just focus on timing of the market, but I think so many people are very caught up with the catalyst that we do have potentially with earnings, the Fed rate cuts, election. And I think has people a little bit confused about when to jump in versus staying on the sidelines.
Yeah, so this was actually something that we had talked about in our mid-year update, right? And we were looking at the idea of this rotation, right, in and kind of performance of small caps, relative to large cap stocks as you move closer to the rate, to the beginning of the rate cutting cycle. So if you look back historically, right, we're kind of in that sweet spot where you do see, during the hiking cycle, you typically see the large cap stocks, outperform, and that makes sense, right? Given their balance sheets are, generally better positioned, and those smaller cap companies, have more interest rate sensitivity, and then as you kind of get into that kind of 3-month time frame ahead of the first rate cut in a cycle, you do start to see those small caps start to kind of outperform, and that can continue into that kind of 3 to 6 months after the first cut cycle. Where that kind of breaks is if you do see that cutting cycle coming if you start to see kind of a credit event, and that's where that will break down in terms of the small caps will start to underperform again.
I want to end with an AI question for investors listening who want some advice about how to listen in on these earnings calls. Is this going to be the quarter where companies can really prove out their AI investments and say, oh, this is actually saving us money in this area, or is it still just going to be a little fluff?
Yeah, no, I don't think we're there quite yet. I mean, I think that in some cases, right, we are seeing kind of the use case, very much being, kind of put in place. Companies like Meta, right? I mean, they're already, kind of very much integrating AI into their business models. But I don't think broadly you're going to necessarily start to see that. We are starting to hear more about companies using it for kind of supply chain, logistics to help, kind of, make those processes more efficient. But I don't think, we're at that point of the cycle where we're going to really see kind of the end, companies, really being able to, show that that AI is really helping the bottom line.
All right, Michael, thank you so much, as always. Thanks for coming in studio with us. It's good to see you outside the floor. We appreciate it.
Thanks for having me.
Michael Reinking, NYSE Senior Market Strategist.